But let's get going. Officially, good afternoon. Welcome. We haven't been sitting here doing other things. We are just ready to get going as usual. I have an amazing group with me. Those of you listening to the recording, we miss you. Welcome to the Market Watch Group Weekly Market Wrap. I'm Scott. I'll be your host. Where's my chat? I've lost my chat. I need to see if people are saying anything to me here. Nope, not you. Minimize you. There's my chats. Love it. I love it. Okay. Whoops. Move that. Oh, follow up on the covered call. I do want to hear that. Sold call for 94. Rolled it out. 96. Okay. Honestly, it could go either way, Breast. When I see a signal, I tend to say, there's my signal. Now, is there going to be a hiccup? Maybe. Is there going to be continuation? So I agree. We don't want to rush into everything. So if you took a couple of other trades, maybe you hold. If you have no trades and then you're like, do I hold? And then you have zero trades and all of a sudden some good news comes out over the weekend and we gap up another 2%, then you're going to be like, oh, can I still get in these? And it's going to be like, well, you're way behind, right? So yeah, I would say we want to temper. Like I said, I see signals in every sector right now, every sector. So do you bull rush? Do you take a couple and then see if we get some confirm and then take a couple, or say, hey, take a couple. If I get a hiccup, then I'm going to put a couple more on while I sweat through the first couple that I put on? Yeah. Yes. 100%. So if no trades, I would be a little more concerned. We're a 4.5. We're already bullish. And as we go through our own posture here in a minute, we're going to see that I think if anything, the score is going to get better. We're going to see, hey, look at this. There's volume. Bam, volume score goes up. Here's some money going into every sector rotation. Boom. And just like that, we're back in the fives. So I would say yes, a bull rush is not necessarily warranted, but I would say trading is definitely warranted, even if it's a Friday. For me and my rules. I'm going to send this. Okay, I had to send one follow-up. You didn't even notice I was doing it that time until I mentioned it. Now you know. But still have to get the text alert out. But let's, disclaimers. Trade at your own risk, no recommendations. Alerts are not recommendations. They're alerts of potential trades that you can consider for your own portfolio based on your rules and risk management. We're not brokers or advisors, yada, yada. Today, we're going to look at the market, talk about it, revisit the posture, mindset for trades, new trades. What are we looking at next week? What is our trading plan progress? We've got a lot to do. We're a little behind. You can see I'm bush league the way I do these things. I'm sure there's a better way, but let's just get a chart up. We'll get a chart up. Let me get this out of the way. Let me just get this text alert. Who gets the text? That's probably the last thing. The last thing that gets sent. Tell me if you get them. Tell me if you like them. I got to get my chat out of the way here. To the Market Watch Group. New trade alerts for TME and APH. Watching the magic happen. That's the way you should perceive this. Watching the magic happen. Let me get this link one more time. Copy link. Now you have a place to go find it. Save and continue. And I need a name. New trade alerts. Bam. Send. Send now. Okay, We can all, I know you guys were a little distracted. I was a little distracted. We'll call it square and we'll just move forward now from this point. How do I, Melody said yes. Press said he might have turned them off. I don't know. Let me find out. I think you have to just email the admin. Is there just like an admin email that you guys have that you work with? I guess I just assume you just have like that you reply to or that's set up, but I really should have maybe a more formal idea of a better structure. I'm on it, team. Don't worry. I'm on it. Good afternoon, John. I didn't see your initial message. It came through the other side, but I see it. Good to see you, sir. Okay, let's talk about the market. Let's talk about it. SPY. Let me get out of the Heiken. That's a nice looking Heiken Ashi. If you're ever looking for a good hash, we went red. Started to slow down, bam, right to, now we sometimes get transitions. Sometimes it goes right to this. If there's ever a good start, it's a red to white transition when you look backwards and you see those and how often in upward trends they tend to work out. Now, could there still be a hiccup? Of course. Of course. Okay, let me get back. I want to see who arrived. I took a picture already, so I know who arrived late. Don't worry, I forgive you. It's better late than never. You're on time for you. I get it. You missed some good stuff. You should have seen a post alert in the Circle platform. You should have seen, I would think by now, an email notifying you of said alerts with the same information. 2, it's a twofer. We said yesterday. I said this morning. I'm like, wait, no, I didn't see you this morning. I said last night there could be a twofer. Craig says, just got the text as well. Bam. Text arrived. Got both there. Love it. Kevin said, I took it and others. And that's what we were talking about. Could you put a trade on in every sector? Yes. Press said, should we have a little trepidation due to, like a bull rush on Friday where there's oftentimes a hiccup? Now, here's the deal. I mean, I think there's more hiccups in breakouts than bounces, but there definitely have been plenty of hiccups in our trades. And we prepare for that. Mentally, risk management, we draw technical lines and we give it as much room as we can, and before we're like, okay, that's it, we can't. Now, the room we give it is also contextual. When we were 6.5, we gave it more room than we do now at 4.575. Where are we? Let's go. We were going to visit that anyway, so let's go look at that. Let me get out of the Heiken Ashi so we can see the regular candle. Opened higher. Bulls carried it all day. We've got 42 minutes left. Let's get some predictions. Average is 70. Right now we're at 62. You might think, ooh, I think we'll end up at 80 million to 83, which will be an above average day. We see plenty of volume come in that last little bit. I think this will be an above average buy day. So then all of a sudden we have a couple of ties and a sell day, and that sell day is now 3 weeks old, almost getting stale in our 1 month analysis. Then we have another tie, red day, but red doesn't mean sellers. Red means what's the shadow? What is it relative to the previous day? It was only 0.25%. A lot of that volume was the buyers pushing it back up, saying, whoa, we're not done here. And now, if we get a buy day, that's gonna give this a tie with buyers fresher. And tie goes to the buyers. So I believe that after today, my volume score is going to go back to 1.25. My trend scores aren't going to change. This is still right in line with the trend we've been in. Now, it could accelerate if it breaks out of this trend line. Then we can talk about giving it a point and saying, oh, okay, now let's go to 1.75. But it would have to break above probably 654. But wouldn't that be a beautiful thing? Press. I didn't want you to feel left out. I'm glad you got the text. Okay, right? Do you see what I'm saying? So long term, not going to change. It's in a great spot We're right in this red. This red is a 1.5. If it can get high enough, we'll go 1.75. If it drops below this red here, then we'll be forced to reevaluate and lower that score. But in the meantime, it's a great perspective, and it's pretty strong on, what did I say? 1.5? I think 1.25, actually. I got to stop. 1.25. Up to 1.5, down to 1. Either way, 1.25 is pretty good. 1.5 is just fine. Volume's going to kick up. Already we're on our way to 5. Now let's go look at major market. No, sorry, not major market. We're going to go look at VIX. I'm getting all excited. Getting ahead of myself here. Once I got those alerts out, I felt unencumbered and ready to go. Friday energy, am I right? Okay. Without looking at it much, as I said, I see bounce within strong trend signals across sectors. I see it in technology. I see it in industrials. We'll see it when we go through our watch list. I see it in communication services, Google, Meta. I see it in finance. It's across the board, which if we see a bunch of that in growth sectors, there's a very good chance we get what we need to give that a knock back to 0.5. So I think that could put us at 5.25. I'm going to start putting my prediction down here for a little while. Just put it in. Prediction for the next week. Okay. So then we look at the VIX. So I'm already a 1/4 point. I'm feeling like there's a 1/4 point in there. Or excuse me, a 1/2 point. 1/2 point. One for volume, one potentially at least a 1/4. And possibly another 1/4. And then we have the VIX. Ooh. Remember what we said about the VIX. We said it starting here that if this just goes up, doesn't get back. I drew a box. You can go back and replay the video. I stand by it. I drew a box that looked like this. And I said, if it goes up in here and turns over, go back and look. I drew that box. I drew that red line. It's there. I said, this will be a lower high than this. And this is bullish to me. Very nice. I would love to see this thing progress on down towards that 11-12 level. And then all of a sudden, calendars. I feel like I should have. Where's Stephen D? He's not here today. I was going to give him. I should have put out an alert in there, but I didn't. I was a little like, with more people, I had to figure out a way that I can build that alert separately where I can link to the calendar spread options foundation course. Now I can plug my own course and be like, hey, if you don't know what this trade is, go watch this. I need to create a little bit of extra like instructional text to be like, if you've never done this, you really should get a good number of paper trades doing it before you go live, things like that. But I'll have another chance to do that, and I've been thinking about it, so I'll be ready. That if we get down into this box, A, these bullish trades will be doing well. B, calendar spread, which is a kind of a leapfrog time strategy. It's very hard to get time strategies when implied volatility is low. When the implied volatility is low, remember that the options are cheap. I like to buy things that are cheap and sell things that are expensive. It's sort of an easy rule of thumb when it comes to how I would guide my option strategy. So right now things are cheap. I'm not going to get much. In fact, even on the covered calls, Melody, you may find that the amount of premium is diminishing. It's decreasing. It was less this time than last time because of the implied volatility. I don't know. Maybe not. Or maybe you didn't initially look at what it was previously. The more you do covered calls, the more you're going to definitely be looking at this and thinking, okay, how is this helpful? But for me, this is a definite 1/4 point, right? This is definitely going to put our VIX at 1.5. This is a strong VIX. This VIX I would say from this point on, I mean, it wasn't terrible before, but you can see this was the prior where we were kind of more 18 to 25. But then all of a sudden, right back in here, we got this little big bust down. And now, if you look at the average, we only have these 2 days where it was above 18. And if you remember, I described a time, a beautiful time from long ago, where dreams come true and fairy tales are reality, and the VIX hovers between 12 and 16, and when it spikes, it gets up to 18, and you're like 20. That's a very bullish market. What does that tell us? It tells us that the institutions who have a lot of money, increasing money still coming into them on a regular basis through 401ks, 403bs, all the institutional things that happen. They're smarter than us. They have more people watching the market than we do. They are confident. There's no fear. Look at this, and this is a fear indicator. And we look at this where we are now. Take all of the noise out. And it's hard. I get it. It's hard for me. Because you're like tariffs and wars and, administration things. And I'd say the market will prevail. The market always outlasts administrations. And so far, everything looks great right now for us. So what are you thinking? Try to squash it. What are you seeing? What do we see here? What do we see on this indicator that is built to measure institutional fear? And it's very subtle. You'll see a lot of people misexplain the VIX. They're like, well, it's sort of like a put to call ratio. You're like, ooh, the fact that you put sort of in your definition makes me question. What? Sort of, kind of, maybe? No, this is not. This is an actual mathematical equation measuring essentially variations in supply and demand over time, representative of buyers and sellers, with an understanding that there is that when it crosses a certain level of demand, there is only one explanation, and that is that institutions with their big footprint are coming in, and that's when we see the VIX spike. Retail traders, this is based on S&P 500 index options. Retail traders hardly trade there. They certainly have no ability to push anything, right? And so this is a very, if we have the right perspective. So I'm just saying that right now for me, I believe that we are going to be, I think because it's a prediction, I'm going to give myself this range between 5.25 and 5.5. That's my thought prediction. Okay, weigh in. Agree, disagree. Now, what would that do to me? The fact that I think we may go from a 4.75 to a 5.25 or a 5.5. That's great. That's putting us back in this range. That means that this was just a dip, not a consolidation. If that was going to be a consolidation, I'd be thinking it would drop back to 3.5 to 2.5. And then if it was going to get worse than that, then it starts to get close to zero. Well, we didn't see any of that, right? So I look at this and I think, yeah, this looks okay. 4.75. Now let's go look at the market and see. You guys are a quiet group today. Talk to me. Don't make me monologue at us today. You never know what you'll hear when that happens. Okay. Let's start at the top. Apple. Did I say there were signs of fear in the VIX today? Not even a drop of fear. Nothing but confidence oozing, putting us down in the 14s, trending down. It measures fear, which as such means that right now there's very, minimal levels of fear. In fact, as a range over the past 2 months, as a range, it's showing better prospects than actually I would have thought. And so I look at that as quite a nice characteristic of the current market conditions. Okay, Apple. The candle's right. This is pinching. This is the kind of thing that I'm like, I could wait. I could wait to see if this thing shakes a little bit more. Like I'm not getting both indications, both an oscillator showing the turn and the candle. So it's like, no need to force things. Archer Daniels just never really, we were watching this and just never gave enough. It just sort of reaccelerated. Okay. Did we make a mistake? No, just never gave a signal that we could latch onto for a trade. Amazon. Now, Amazon is pinched and maybe even turned a bit positive. It's a big day. Already up 3%. When I see that and I think, if I got to try to put a stop loss underneath this action and give it at least that space, that's big. Right? That puts, I'm getting maybe 1-to-1 if I get to this old high. 2-to-1 is here. 3-to-1 is up by drawings-ish, right? Like, and I think to myself, that move gets me 3 relative to this 1. Then I go backwards. That was not that move. That was not that move. That's closer, but still not that move. One time we got that right coming out of this earnings. You can see it got that right there. That would have been enough. That was not enough. Even this one was not enough. So when you look at that, right, and you think, is this the trade for me? When it's that, it's not that I don't think it's going up. And if someone took this, I wouldn't be like, oh, what? Why'd you take this? I would think that this is a trade that I would be able to move quickly to a moving stop, ratcheting it up so that if it all of a sudden falls apart, my loss is less and less. But I don't see this giving more than 2-to-1. It's 2-to-1. And if that's good enough, it's good enough. But when I have a good bounce day like this going into a weekend when I think the market or when I think the posture is going to improve, my thought is I want to see if there's something that I can knock one pretty, right? Find a cheap option, get a 4-to-1. That's my preference if I can. So that leads hopefully a little bit to the why behind what would lead to like TME and APH. I mean, you'll see when we do a similar type of a scope like this. A lot of times it's not when we look at a trade and we say yes or no. It's not like we say no because we don't think it's bullish. That looks very bullish to me. I think that could definitely bounce. Definitely make a run at new highs. I think the stochastic is right on the bubble. And I think that, based on prior moves and what this has already done, I'm maybe going to get 1.5 to 2-to-1. It just doesn't have the punch necessary. Hopefully that makes sense for a soapbox moment. APH, though, you can kind of see, I can keep going with this. This is maybe one of the bigger ones, and you can see missed it a little bit there, but almost got it. Definitely got that there. That was the one I took it from. Sorry, I thought I copied it. I'm like, look at how perfect that one is. Of course it is. Of course it is. Prior to that, you can see making the moves. So this one here, the last move was a little bit like not quite as much, but the one before it was even actually a little bigger. Now it had earnings, so I think I actually traded this, but only to this point. Does that sound familiar? And then got out, made some money with that. I feel like that's what happened. I don't know if I alerted this one, but I think I traded both of these last two. This was a bit choppy through here. I mean, technically you could come from this low like that and be like, hey, if I caught that was the turn, it made that move and then some. So yeah, there we go. I'm now. What does that give me? Well, that gives me a move up here, and then you might think, well, are you putting your stop below? No, I don't. I don't put my stop underneath the low of this because that to me is an extreme that led to this hammer and this hammer being confirmed. And so it gave back a little today at the end of the day. It was a little higher up even a bit ago. So to Press's point, you might look at it and be like, I'm going to wait on this. Or you might think, hey, if I'm going to take it, this is going to be my best reward. I'm going to go a little below and be like, there's this, and there's what I get if I'm right. And nope. Sorry. Come on, Scott. I'm on the first white. Now this is a transition candle. That's not a momentum candle, but so is this. So I had this big red candle with no follow through. The next candle was a transition candle. Here is a series of transition candles, red transition, white transition. Here is a series of transition candles. When do we tend to see those? Not as much here. This one was one that went straight to the big white one. Okay, great. But as you look at that and you think, what do I have now? I have the red. I have the transition. There's my pattern. So, questions? That led to the target of 118. I believe 118.10 was what I said, right up there. Stop was around 107 and a quarter, maybe, right down in this range. 107.50, maybe a little tighter. And of course, I'll if it's in question on Monday morning, I'll pull that off. We'll talk about it on Monday. Of course, we will. So there you go. That's one. AXP, you can see is an acceleration. Just sort of little boom, pause and go. Bank of America, still going. BTI, little pause after it tried to make a pop at first. This was one I was thinking about right here, Citi. It's a little big. Now, again, I probably would put my stop closer to the body than the lows of this, but even still, you're looking at about $3. So I would need at least 6 to get 2 to 1. That's here. 3 to 1 is up here at 109. No, let's see. 104. Yeah, actually. I actually feel like that's still viable. If we want, we could even play with one that's outside of the alerts. Here's a move. Whoops. Here's a move. Let's duplicate that and see how close it is. This one's a little smaller. Okay, so I'm going to duplicate this one. And I'm going to move it over here. I'll put it right in here. Give me this. And I'll give this a little more room. So yeah, 105. That's got 105 potential. That's 9 to the upside. If I put my stop down here, that's about 3. I think you could get a 3 to 1 on this. We'll come back to that. Let's get through the watch list and we'll play with that. Caterpillar looks bullish. CCJ, I'm not trading out of it, but watching it. CELH is actually pulling back a little. We'll see what happens there. This one looks like it's bouncing. That's viable. That's a viable looking trade. Capital One, big bounce. Big. Look how big the moves are in financials. 3%, 4%. Crypto got 6%. Cisco, not as much. Delta, big move. DoorDash, not as much. Diamonds, look at the Dow. Dollar Tree, even for a defensive, still looks pretty good. You can see Not a lot of time before earnings, but you could still potentially trade that. EA, didn't get much. Estee Lauder coming back from earnings. Look at Expedia, big move, 5%. I mean, it's a big move and it's bullish, but it's not really tradable bullish, right? That's the point. We can't look at this and be like, oh, look at all this white. I should be trading. No, to Press's point, we don't want to just bull rush. To my point, I still want to make sure that I'm adhering to some reward to risk standards, expectations, a code. A trader's got to live by a code. Everybody knows that. Look at Futu. Bam. Going. GE looked like it was setting up. Gave it back at the end. GE Vernova. So the industrials were showing some strength. A little bit of a give back, but it's not like it's like selling off. It's like the buyers lost a little steam. With a little excitement pulled back. Gold was bullish today. I looked at Google. You can see. And as Google pulled back, it's actually pulling back into a range where I'm like, hey, on Monday, if it's sitting here on this line that I drew, and I can skip this and get into this thing around, let's say, 204.50 to 206, which is in this range, but after the weekend, continuation trade. We'll see if that has... Didn't get it last time, but I'm going to look for it again. And if it doesn't, I'll close it profitably like I did last time. Goldman Sachs looks bullish. Hasbro looks bullish. Robinhood. I didn't like the reward to risk, but I was looking at it. Howmet, no. Again, Howmet, where? Industrials. So industrials, not quite as much, but so far then it's not 5. It was 5 at one point, it's still 4. I still see it in financials. I still see it in communication services. I still see it in technology. I still see it in consumer discretionary. Almost forgot right at the end. Pulled it out right at the last minute, grabbed it. IBM, no. Intel, kind of choppy, like we said. Excuse me. GLBY. Maybe. Ooh, I'm almost there. Oh, no, I went past it. Sorry. Let's stop and talk about it. Right? 3.8%. 3.8. Now, here's the thing. I was saying to you, I was thinking about this. Whoops, I'm not drawing. Sorry, let me go back. No. What are you doing, Scott? Get it together, man. I was thinking about this. I was saying if I traded, I'd trade this, but I needed this. So I can catch this bounce and put a stop here and have a target here. Like, what am I going to do with this? There's nothing left. Nothing. ACHR. Okay. Love it. I thought about not Levi. Levi looks bullish though. Thought about this one a little bit. It's got some good moves and it's coming out of this consolidation. If I thought I could catch one of those, that had something. That had my interests. Only had monthly options, but it had decent open interest in those monthlies. Okay. The Sands, bullish, popping. Meta. Look at Meta. That's what it did last time, coming off this. Is that worth consideration? Yeah, I absolutely. That was one I was like, what do I think about this? I still think that one has 3-1 or more. Anybody look at or trade Meta? But again, this is very broad based. You know, this and again, you'll always hear people be like, "Oh, it's only the Magnificent Seven or the Fabulous Seven or whatever it is." Yeah. Apple is bullish today. Amazon is bullish today. Facebook is bullish today. Google is bullish today. Not as much, but Microsoft, and it had been on a terror of a trend till we look to come in, and then we end up stopped out over here. But again, we stop out. We don't keep writing down. That was the end of the trade. Okay. We move on. Dust ourselves off. No big deal. Micron. Not as bullish, but still bullish enough. Netflix. So Netflix is a little off cycle, but I actually still look at this as saying, hey, this is a viable opportunity in here going into next week. Northrop is our new defense, not defensive, defense stock. We look at it as being stronger than RTX. Looks like it's pulling back, maybe turning into something new. NVIDIA, close to earnings, but turning around. PGY, turning around. PLTR. I said this is not enough for me. I needed to go through there and get back. Then I will ride. Until then, I will watch. Qs look bullish, like it's bouncing off a higher low. Roblox, still a bit iffy. Reddit, pulling back. Still setting up. That was the buyers like, hey, we're still here sniffing around. If this thing turns, I have a nice first point and then think maybe I can climb a little higher than that. And there's my potential opportunity. Rocket Lab. Ooh. A few people were holding on. Did you hold? It held the 50. If you included this support level right through here, then it held the 50. I've got to stop messing up my drawings. Tell me if you're a Rocket Labber. Melody. Yeah. I mean, look, if you're going to hold this, holding the 50 makes sense. It got a good bounce. Now, that might not mean anything yet. It does look like it's going to make a run for that. If we can get through it, maybe it gets ready to ride again. Silver. Popping today. 2%. SoFi. Boom. Making a move. SPY. A little bit. Now, what do we say about volume? Where are we at? 13 minutes left. And now we are within 3 million. Within 3 million. Now, I'll tell you, we only need basically 5.5 million. We only need 5.5 million, and we're getting that score for the volume. I think it's definitely happening. There's TME. Now, this is a little bit more of a momentum play, but you can see this was an acceleration. There's the trend. Strong. We already liked it. They got good earnings, and it accelerated. So I think it has the capacity to actually do 3 of these on this acceleration. I'm only going to take the first one, but the first one you can see has plenty of opportunity. Looking to get up here around 29.50, stopping out down here 24.50. Let's see what this thing can do. Is this a turn? No. I took this one just on price alone. We'll see what happens. Would this be one that you could say, hey, you know what? I'm going to wait till Monday. Of course. Of course you could. Of course. Tesla, bullish. Big bullish. Big reactions. TSM, looking like a bounce. Uber. So you rolled to a 96 and it's already at 97, which is fine, right? Because once you have your roll in place, all you care about is if it's above 96 by $1 or more, you're just going to sit on it. Wait till you get caught out. Get caught out at 96. Your cost basis is down below 89 and you're thinking, hey, I made $7 over the course of whatever. Never really took too much risk. Never really had to sweat it out very much. That's how they're supposed to work. Tell me if I misstated any of the variables, but it seems like you went 2 weeks out to 96s. Bullish dollar, flat. Oh, the basis was 93.84. Is that what you paid for the stock? Or is that what you paid for the stock minus the first call that you sold? Anytime you get a credit, you're going to lower your basis. So if you sold the 94s and you got $1.50, then you would say 93.84 minus $1.50. So that's 92.34. And then if you got another credit for rolling, which you should have done, right? Then you're going to lower. So whatever, as your basis is take what you paid for the stock and then subtract anything you ever sell against it. And then what you sell it for. So, if you end up doing 2 or 3 calls at $1.50 a piece, you're going to be $4.50 down from the original basis. And then if your strike price continues getting a little higher, well, then it's like now, I'm $4.50 below, so I'm at 89, and then I sell it at 96, and that's where the $7 is. And so, yeah, that might have been confusing when I didn't explain that all the way. Yeah, so whenever you sell premium, you basically are lowering your cost basis. Or what you're going to end up doing is you're going to keep track of the stock, and then the options is 2 separate trades, but they're really not, right? Like you don't want to be like, I sold the call for $2 and then I bought it back for $20, so I made $1.80 on that. Yeah, you made $1.80, and you subtract that, and then you put it all together so that when you walk away, you know exactly what that trade produced. Okay, Visa looks bullish. I would say it's done enough to have this be now that if we pull back to some higher lows, yeah, I'll start looking at a lot of these for these trades. VIX is down at 1426. That's the new low for the 6-month chart. Pretty good. Walmart, gap down, not doing so good. We're going to keep watching it because it's Walmart. So not everything's doing well, but this is more of a defensive stock anyways. Okay, we got through the list. We looked at the trades. There are trades. There are other trades. There are continuation trades. There are trades where we might wait for a little more confirmation. There may be a hiccup. There may be a straight shot. So next week, we may see confirmation for more trades and get into more. We may see a hiccup where we're like, okay, I'll hold the first couple I put on, and then if this hiccup bounces, I'll still be in those, and then I'll add a couple more on the bounce. And that's, to Press's point, making sure we don't bull rush this thing if we're not ready to get that level of risk commitment involved. Yeah. How's everybody's record keeping and analytical understanding? It's always interesting to me because when I used to do a lot of one-on-one coaching, which I just don't do anymore. When I used to do a lot of one-on-one coaching, we'd always go through an intro process, right? Where I'm like, yeah, I introduce myself and what my background is and what I focus on, and and then they do a little introduction, and they used to send us like a little, like fill out this sheet so the coach can get to know you a little bit. I would skim it. I had questions that I would ask to try to get to like, okay. But it's an interesting thing because I would always tell people, we had an hour to get to know each other here. And I would always give them the trade log and say, but here's the deal, is if somebody gave me their trade log with 100 trades filled out, I would look at that log. I would spend 5 minutes looking at that log, and I would know more about you as a trader than you could ever tell me. I would want the actual trade entry so I could go look at a few to kind of be like, I could match some dates and be like, yep, okay, I see what's happening. I mean, I could within 5 minutes, I would know more about it, because when I ask people questions, I get a little bit of the Facebook answer in the beginning, right? What do I mean by that? The projection. Oh yeah. I wait for bounces. I'm like, look, I still lack discipline at times. I don't I don't try to pretend like I'm some kind of perfect trader. You guys see the mistakes that I make and that I'm willing to talk about them. It's okay. But it's like, they're like, yeah, 3-1. That's what I look for. And then we go and we put their trades in. They get their last 25, and I look, and their reward to risk ratio is less than 1-1. They're making 0.8 and they're losing 1. We can't make money that way. You got to be right 90% of the time to make any money, if that's your right 70%, 80% of the time. I want to be able to make money being right 40 to 50% of the time. Making money 40 to 50, right? Not needing that. But it's interesting because what we think versus what we understand when we actually see the numbers. The numbers don't lie, and it's easy to sometimes like tell ourselves, yeah, we're doing it right, we're doing this, and the numbers are like, no. Unequivocally, you need to make changes, and here's where those changes need to come. It's good information. It's hard information sometimes, right? It can be difficult, but I think that's the information that we want. So, record requires how to navigate an Excel spreadsheet. That's a good point. Like maybe I should take a more granular how-to where I actually go fill it. When I go through it, do I fill it out or do I just talk about the columns? I don't know if I actually fill out a few rows. That would probably be a useful thing. So I will definitely maybe. And that's a great point. Not only is he a Jedi, but he is so willing to help out. Your spreadsheet isn't working. If that's true, I would say delete it and then go download a new one and start fresh to make sure there wasn't any like accident. They should be pretty, but if you go in and try it. But here's what I would say. Let's do a Tuesday session, right? Tuesday night, we'll do a record keeping session. That seems like it'll work well. Okay. What else? What other questions? Yeah, that's a great. I'm glad you flagged it. I want you guys to kind of be like, hey, you gave us this spreadsheet, but if I don't know how to use it, that's not that helpful. Great. I agree. That's a fair point. So let's go spend a little time in that. We'll record it. Maybe I'll cut a chunk of it and post it evergreen in a course somewhere. I don't know. We'll see. We will see. I think we're going to have a nice market posture discussion that shows an improvement in underlying conditions. Look, here's a fundamental principle I haven't had to talk about for a while, but this is what I'm going to leave you with. Don't fight the Fed. I'll tell you what, when we first came to the pandemic, like the second, and if you want to go back and throw some credit around, go give Powell some credit for what he did as the market was just taking an absolute dump. We were losing 5 to 8% in a day. I mean, it was insane if you didn't see it. And the Fed stepped in, and I can go show you on a chart how the Fed basically saved everything. Everybody forgets things. They're like, oh, Powell, you're the Mr. Late guy. Oh, man. Trump should have been thanking the heavenly stars for what Jerome Powell did to curb and stave off what was happening at that time. Magnificent stuff. Don't fight the Fed. What did the Fed say? He's been showing some reluctance, and now, like Press said, there's some dovishness there that's new. It's like, oh, well, if he opens the door, that's a much better prognosis of the market overall. So that's not something we score, but I do think it's worth talking about. Don't fight the Fed. That's what I end with. It's good to see everybody. 5.25 to 5.5. That's my prediction. I have it on record now for when we meet. I will see you guys Sunday morning, 11 a.m. Eastern, 9 a.m. Mountain Time. And yeah, that's it. Happy Friday. Have a great weekend. As always, happy trading.